is ready now to give her presentation. But let me first introduce her to you guys. She is a proud mother of one. Her name is Judith Cachero, or JC, as she is fondly called by friends. She has an undergraduate BS, or rather, she has an undergrad BS Commerce degree majoring in economics from the UST University of Santo Tomas. She took her graduate studies at De La Salle University with a master's in computational finance. So she is a risk and compliance professional spanning more than a decade of experience with expertise in sales compliance, operational risk, and fraud management for financial institutions, focused specifically for trust banking and insurance. She was the chief risk officer and compliance officer for Philippine Commercial Capital Incorporated and is a member of the Association of Bank Compliance Officers, Association of Certified Fraud Examiners, and the Pan Asia Risk and Insurance Management Corporation. Friends, fellow Bosconians, to speak about what now, the current financial landscape outlook for 2020 and onwards. Without further ado, medyo naghihintay na rin siya kanina and very excited to speak already to us. Please welcome Miss Judith Cachero.
Hello, everyone. Good evening.
Good evening.
Yes, good evening. Si B-Boy, Jeff though said that B-Boy can be my page turner.
All right, here we go.
All right. Okay. So good evening, everyone. No? Disclaimer lang at the start. So thank you again for inviting me to participate in your webinar series. I am very pleased to share my perspective regarding financial risk for the last year, an analysis of that, and for 2021. My remarks are being made in my capacity as a risk and compliance professional, and in no any way will be reflective of the views of, let's say, the Bangko Sentral ng Pilipinas or the Basel Committee or the organizations where I am part of. So let's begin. Okay. So next slide, please. So our discussion will begin, of course, with a definition of financial risk. We will also cover categories of financial risk. We will define them. We will look at its application. Upon completion of all of that, we'll summarize the current landscape insofar as investment is concerned. And let's take a look on the response insofar as financial risk is concerned. Okay, so let's begin. So we define financial risk as the possibility that an outcome of an action or event could bring adverse impacts. Now, such outcomes could result either in a direct loss of earnings or capital, or may result in the imposition of constraints in a company's ability to meet its business objectives. There are a lot, next page please, there are a lot actually of categories insofar as financial risk is concerned. We look at, let's say, commodity risk. Commodity price risk really is that change in the price of a commodity that is normally a key or output of a business that could actually potentially affect the financial performance. It should be noted that many commodities really are they have a foreign exchange component in their price. So for example, this would include oil, gold, sugar. Another example is click pa natin, sir. There. Funding risk. No? So funding risk really is most often faced by large volume borrowers who issue debt securities. So these borrowers will rely on the liquidity of their securities depending on in order to maintain their prices, to smooth out price volatility, of course, facilitate future issues. No? Sometimes there is risk nga lang that some investors will think that the security is insufficiently attractive which will cause, let's say, the prices for it to fall in the secondary market. And then, of course, there's also the possibility that access to the market may become difficult. So for small organizations, funding risk will exist in the extent to which they rely on the support of their bankers and shareholders as a substitute for, let's say, issuing debt securities in the wider market. So another is credit risk. So credit risk really is there is that another party in a transaction will not be able to meet its financial obligations. So the general term credit risk will include counterparty risk. That risk is really that the other party to a transaction will not meet its obligation insofar as timing and amount of settlement is concerned. Uh, there could be also country, political, sovereign risk associated with government directives and policies that may affect the contractual performance of the either party to the transaction. And that generally is beyond the control of the counterparty. Okay, so next is, we lump it all together now, liquidity risk, interest rate risk, foreign exchange risk, and business or operational risk. So we focus on this one, no? It has now become critical for financial institutions to not just measure liquidity, but to also consider every possible scenario that could affect their overall liquidity profile. So the risk event now, in this case, which is COVID-19, has translated into adverse credit, liquidity, market, interest rate, and business risk scenarios. So this illustrates how crisis has had that unexpected impact, and it raises the question of whether it could have been modeled through stress testing. So that's another discussion altogether, you know. Pero when you look at stress testing, it should be able to provide you a complete picture of your risk profile, and it will give management a better understanding and a comprehensive view. So if so, it would help them to assess the probability of such grim scenario and will be able to take necessary actions. So for this discussion now, we'll focus on this four risk. So next slide, please. So we'll focus on these four investment-related financial risk categories. We'll look at liquidity risk, we'll look at interest rate risk, foreign exchange risk, and operational risk. So we begin with liquidity risk. We define liquidity risk as that risk that the entity will not have sufficient funds available to pay the creditors and other debts. In the scheme of things, it looks like it's the primary consideration insofar as risk management is concerned for most financial institutions and even for other businesses as well. It's the major concern of all borrowers insofar as the banking sector is concerned. Okay, so we move on. So liquidity risk really, this includes that loans may not be available for certain organizations when they require them, or when they will not be available for the required term, or it will not be at an acceptable cost. There is also a risk that bank credits will be terminated if the borrowers will reach the loan covenants. So that being said, the company may have to keep unused funding sources in reserve for potential outlays, such as debt repayments, capital expenditures, seasonal fluctuations, acquisitions, and contingencies. Um, the funding sources may also include equity issues in all forms, no? Regardless, pwedeng preferred, pwedeng common. It could also include debt, supplier finance, and leasing. COVID-19 is underscoring the importance of liquidity risk management towards financial stability, especially during this crisis. Truly, no, the last true global crisis, if you still remember, is the credit crunch of 2008 and 2009. It created a squeeze in liquidity that forced several high-profile financial institutions out of existence and left others actually towards insolvency. So the impact of the pandemic is different for a host of reasons, but the threat remains similar and maybe even greater in magnitude. No, the pandemic has put a massive brake on economic activity globally and across many areas of human endeavor. The entire industry sectors have gone dormant for months. This will include hospitality, travel, tourism, which are particularly hard hit. No? And as businesses dig deeper into their reserves and seek sources of funding to keep the doors open, access to liquidity will continually tighten. Um, the Basel Committee, which is actually the primary go-to for regulations for most central banks, has actually introduced measurements, which includes yung liquidity coverage ratio, net stable funding ratio, combined with the central banks, including ours, BSP, um, on the ongoing quantitative easing activities. You will see this. You will see interest rates going down. So if, for example, as an investment house, you would invest, let's say, in a commercial paper, um, its interest rate is the rates for that is actually driven by the interest rates as released by the BSP. And so you will hear once in a while, sabi na, ang baba na ng rates, no? And it's actually part of the monetary and fiscal policy tools that is being used by our central bank. It's really intended to keep everybody afloat, no? That's the primary reason right now. Okay. So how do we apply liquidity risk? If you see, no, domestic liquidity by noong December 2020 is at 9.5% year on year. So akala mo malaki? No. Because in November 2020, it was at 10.5. Consumer lending expanded at a slower rate due to the slowdown of credit card usage, motor vehicle loans, salary-based consumption loans, and you will understand why. Marami nawawalan ng trabaho. And we're saying even on our end, for BSFIs like us, because I belong to um, a non-bank institution, we are saying that the banking sector will be badly hit, and it will be seen not for 2020 but for 2021. As we look at the pandemic at the longer haul, hindi lang siya 1 year, 2 years. We see the impact ranging from 3 to 5 years. So we're seeing for 2021, we expect bad loans ratio to peak at 6.7 as compared to, let's say, the last years, no, wherein 700 loans out of the loans compared to November of 10.3 10.6 trillion. So you see the difference. And we will see that going lower as we go along. Okay. So next is the interest rate risk. Interest rate risk really are the movements in the changes of variable interest rates. This will affect the financial performance. No? So either you increase your interest expenses or you reduce your interest income. Next slide, please. Yeah. We normally say, no, economists will always say that the rise in interest rates will encourage people to save because it will lead to increased income. But on the flip side also, the rise in interest rates, the changes in your interest rate will also affect your fixed rate securities as they are marked to market. So what do you mean by marked to market? It's the pricing, no? It's the pricing of a particular fixed income asset. No, there is an indirect relationship, no? If your rates are higher, your value goes lower. So that's basically it. So if your rates are lower, then your prices will go better. However, kapag tumataas yung rates, bumababa din yung presyo ng fixed income mo. Okay? So also, if you are a bank, no, there is such a thing as a mismatch in cash flow. So you analyze the contractual maturity of your debt or lending relative to your projected revenues. Therefore, any changes to that will mean a potential interest rate risk. Next slide, please. Yeah. So we look historically, at least for the last 3 months, for the interest rates. Last November 2020, it was at 2.5. For December 2020, it's now at 2%. There are no releases yet. In fact, the interest rate reports will be released on February 11. So it's expected to be at 2% as well for January 2020. The view of a lot of bankers, research analysts, and economists is that the probability of the BSP staying paused throughout the year for 2021 is higher than a rate cut, with expectations of a wider distribution of vaccines for the first half of the year, effective execution of the 2021 national budget, and persistent negative real interest rate conditions. The fiscal support is also deemed to be more effective in revitalizing growth recovery from the health crisis, as compared to the monetary policy. Hence, we expect the BSP to hold the RRP rate steady at 2% until the end of the year. The positive news on the vaccine front has actually brightened the global economic outlook somewhat. So the domestic indicators suggest improving dynamics in the fourth quarter, even though the typhoons could actually dampen the output. But ayun, we are very sure actually that the rates will still continue at 2%. The BSP really has eased a lot of monetary policies and brought in a lot of relief measures to limit the fallout of the pandemic. They have cut reserve requirements so that the banks will actually encourage lending and help up uh, shore up the financial system. So even if the banks will look at, probably because there's a credit slump, there's a slump in credit quality. But the BSP sees that there has to be some extension to be made insofar as lending is concerned. And this is why the BSP is doing this. So we move on to the foreign exchange risk. So what is a foreign exchange risk? This is the risk of variation in the rate of exchange that is used to convert your foreign currency revenues and expenses to Philippine currency. So where there are assets and liabilities dominated in the same foreign currency, which is a natural hedge, the effect of a change in, let's say, the Philippine currency, the Philippine peso, will reflect the net change in value. Okay. There are actually three types if you look at, let's say, foreign exchange exposures. There is one that's your transaction coming from your normal business operations. So, for example, it will include trade purchases, sales, short-term borrowing. Another is your exposures from resulting from the conversion of your long-term foreign currency assets and liabilities and translating it into another currency. So, for example, it will include equity investments, capital items. The last one is competitive exposures that will result either profitably or otherwise from adopting a different approach to managing your foreign exchange exposures as compared to your competitors. So generally, when you see foreign exchange risk, really it is when your shareholder wealth is dominated in Philippine peso. The rise in the value, let's say, um, um, of the currency relative to of that currency, let's say for the peso to another currency, has a positive impact for your foreign currency liabilities. There's a direct relationship. This will reduce the cost of conversion to Philippine peso, and it will have a negative impact on assets that will reduce the value in Philippine peso. Conversely, pag bumagsak naman yung value in Philippine peso, then the cost of the foreign currency assets will also increase. Okay, so if you look at this one, no, this is a slide of the USD PHP exchange rate, no, spanning from 5 years up to yesterday. So the Philippine peso has increased by 5.4%, no, the biggest gainer probably in Southeast Asia, and we are expected to be at 47.50 at the end of 2021, all else being equal. So the Philippine peso is seen to be notching a third year on gains for 2021 as the sluggish economy recovery curbs the imports and with remittances expected to rebound. Okay. Next slide, please. Okay. So what are we saying here? For foreign exchange risk, no, because we have there is a falling demand for US dollars because of the falling imports. We see the Philippine economy to be starting to grow by the second half of this year. We are probably one of the slowest to recover as compared to our other Southeast Asian counterparts. Again, because of this, BSP has committed to a more flexible foreign exchange policy so that it could improve the economy and also hence improving the currency supply and demand. As long as we would always say, no, as long as domestic demand is far from full recovery, we will always expect the peso to get even stronger. So last one, business or operational risk. And again, this is the broadest of all. No? Business or operational risk is the financial risk generally associated with the internal and external systems for the monitoring, negotiation, and delivery of financial transactions. The risks are really wide-ranging. They could include natural disasters, human error, the breakdown of financial systems, and the failure of electronic systems. The proactive management of operational risk, in addition to the compliance of all financial institutions and other entities to, let's say, BSP, the Basel Committee, and for those who are not reporting to those two regulatory agencies, the SEC, necessarily leads to improved production conditions. It helps us streamline the processes, which results in increased productivity, improved quality, leading to a better brand image. In particular, such approach allows the development of quantitative tools which define objectives for operational teams in terms of reduction of operational risk. Next slide po. A little more. One more. There. The business landscape, no, has become more precarious due to the productive uncertainty and confusion in pandemic response approaches. So there are challenges in the um, vaccine rollouts, emerging virus variants, and the spillover effects into other risks. This monumental shift could actually create potential catastrophic risks on a longer horizon. So the hasty rush towards automation in response to the need of efficiency and reduced on-site labor may expose the businesses to unforeseen financial and ethical risks, particularly with more socially activist consumers and workforces concerned with job losses and those who are willing to take their talents elsewhere. Um, the um, World Economic Forum has actually released the global risk landscape, no? So it shows yung top global risk uh, by likelihood and by impact, no. They are saying that the businesses should watch for three drivers of risk: political, technological, and societal risks. If you look at how things are being done, especially for the small and medium-sized businesses, they were really hard hit during the pandemic. They will find that the recovery for the recovery cycle is quite unkind. No, if you let's say look at the U.S., we're in about half of this small medium enterprises have closed from the months of January to April. We look at probably the same figure for the Philippines. There are many governments also increasingly shifting towards protectionism in order to create a more sufficient, more sustaining economies, partly in response to the pandemic, during which there were border closures, lockdowns, export restrictions. It has choked extended supply chains. Therefore, companies must keep an eye on the shifts on domestic policies that will focus on national security and self-sufficiency. Um, for the technology drivers are also seen to be accelerating and disrupt the business landscape. The pandemic has precipitated a tech revolution for big and small businesses alike. So there's a rapid digitalization transforming social and work interactions almost overnight. So there's e-commerce, virtual conferencing, um, gaming and streaming. All of these, they showed unprecedented really growth. No, it's estimated that worldwide internet usage has increased by 30% in 2020, while e-commerce has grown or estimated to have grown by 20%. This rapid digitalization has also increased the company's cyber exposures, no, and created more complex and potentially less secure networks. So the Global Risk Report for 2021, in fact, highlights the failure of cybersecurity measures as a short-term risk. And throughout 2020, we've seen increasing cyber attacks on government agencies and companies globally. Many have leveraged the COVID-19 crisis to infiltrate networks. So globally, the attack volume doubled from the second half of 2019 up to the first half of 2020. So in a nutshell, what are we trying to say here? So beyond the public health challenges of the current crisis, governments, international agencies, and companies have struggled in multiple dimensions with their response to this global risk. All organizations can learn much from the past year. However, instead of preparing for the last crisis, they should seek to uncover transferable lessons that could apply to a range of complex and emerging threats. So let's look at the past accomplishments where the public and private sector has come together during the crisis. We have seen the rapid development and distribution of multiple vaccines. We have seen the repurposing of supply chains and manufacturing process so they can develop PPEs and medical equipment. There was a shift to remote and new ways of working, even in the most heavily regulated industries. There are changes in fiscal controls and monetary policies to allow businesses to adjust, given the global economic climate. This capability to act with single-mindedness per purpose needs to be institutionalized. The pursuit of national and global resilience is bigger than any organization and any one risk. So what are we trying to say here? How do we respond to this risk? There are two major steps. There has to be one major collaboration across society, the public and private sectors, communities, NGOs. It's essential, no? It will involve developing stimulus programs that would incentivize sustainable recovery efforts. That would include green infrastructure and clean energy projects. It will require partnerships between the public and private sectors to upskill workers for an exploding digital economy. And it ought to actually necessitate the creation of new pandemic and emerging risk insurance mechanisms that could help stabilize companies during the extended crisis events. Second is that in order to build and maintain resilience, it is important that the business keep an eye on potentially high impacting events in the short and on the longer term landscape. And then be prepared to respond effectively, creatively, and collaboratively. This is vital for businesses and for the global community to sustainably navigate the risk and opportunities ahead so that they can strengthen their resilience and to future shocks and progress towards longer term prosperity. So that is the end of my presentation. I am now open for questions.
Wow. So, guys, very insightful presentation about the risks involved and what we are facing in this new year. Do you guys have any questions for Miss JC? Any questions, guys? Medyo, Miss JC, medyo ano pa, medyo hinanan pa nila yung, yung presentation mo. Yeah. So, let me just start the ball rolling by asking. So, what industries do you think will be doing the best, or let's say recovering first in this year, in 2021?
I think the pace is almost the same. No, we have seen the banking sector remains to be resilient, no, but
Yes.
the effects actually is to be seen much later on. The effect really is we're looking at, let's say, bad loans, no. Sabi nga namin, hindi natin makikita yan. Next year pa yan when we start reporting. And we have seen now, look at, let's say, Union Bank reporting 17% weakening in their profits. No? And you will see more of that. We have seen, and we are surprised, let's say, logistics, no, which came really as much of a surprise, because everybody's not seen in the malls anymore. Everybody's doing online. No, when you have like, a business such as, let's say, ano ba to, yung mga logistics company, no, and they were also surprised as well. Hindi sila handa na marami palang willing mag-online business. No? Diba? Marami. We look at, let's say, for education, it will be the same. It will be weakened also. But we have seen actually an influx of, let's say, homeschooling for most parents. No, they have shifted. No, if you look at, let's say, education to from a traditional standpoint, bumababa. But you see a shift coming from a traditional school to, let's say, homeschooling. All the kids are moving in that direction already. The malls will be the same. Hospitality, it will be a struggle at least for the next 3 to 5 years.
Right.
Amazingly and ironically, we will always say hospitals really is a good business nowadays. You see more. You see more, oo. You see, let's say, sabi nga namin, baka tingin talaga nila, let's say for Cardinal, they're building another wing for COVID, no? Sabi namin, they probably are looking at increased number of cases, which is a scary thing. But if you're a businessman, good thing, di ba? You can overprice and nobody will ever even know and nobody will even question. They want to live.
Yeah.
No? Gusto nila mabuhay, they will pay for anything. Mahihirapan pa siguro if you have an HMO business kasi every time pupunta yung tao, matatakot ka magbayad, no? So you have to shorten tuloy yung asset liability, term mo. Instead of, normally for insurance kasi mahaba ang terms, no? They pay, look at the longer term. Pero ngayon parang umiiksi na and that now becomes a challenge, no? For most insurance companies. Because they have to pay for certain usages now, hindi na siya in the long term. So to answer the question, there are increases, let's say, may substitutes kasi let's say education. For traditional schools, bababa yan. But it shifts to another market. The malls are going down, mainly because people are afraid to go, no? They're afraid to go. But you see a shift towards online, no? Which is, normally, babae lang yung bumibili noon diba? Mahilig kami mamili sa online kung ano-ano lang. Ngayon, people buy refrigerators online.
Right.
Tsaka na rin, bakit nila binibili yan? When in fact, you have gone away from, traditionally, you wanna touch a product, pero ngayon, you just read through the brochure and you'll be content. And you probably ask somebody else to tell you the experience and you'll take it from there. So, the semantics of people doing business and doing what seems to be normal back then has completely changed because of the pandemic. And yun nga, the businesses are quite different. Malayo doon sa mga naisip mo dati that will be doing well. For a time, we were saying na mahina na logistics ngayon because there's like marami na masyadong players. Hindi naman na totoo yun. Ang dami na. So, those things.
Yeah. Okay. Grabe, ang galing, ano? The pandemic actually is a game changer talaga, no? So, a lot of industries are realigning. Yun nga as you mentioned, logistics heretofore supposed to be not a very lucrative industry, but now, look at it now, it's very lucrative. Miss JC, biglang nabuhay yung chat box. Ang dami.
Oo nga.
Si Jeff asked let's ask the questions in chronological order. Okay, so Jeff is asking, does it look like we can recover economically with all the costs and no income for government?
We can naman, but it will not be this year. Slowly, it's a sluggish pace really because the BSP is trying to they're trying to make it a good landscape for businesses as well. So makikita mo talaga na maingat si PSP. Kasi marami na mga negosyo ngayon na humihina na rin, nahihirapan na. And no doubt, either people are keeping their jobs but they have taken rate cuts, no? There are people who are losing their jobs and shifting to another. No, I have friends, let's say, from the investment house industry, lumabas, nagbe-bake na lang ngayon, no? So maraming changes, no? From that standpoint, you will look at everybody else and you will say business will grow because people will look other way. They will shift into what they seem will be a good change for them and they will try to make it work. And so overall, with everybody doing that kind of standpoint, we will recover because people will try to be. Filipinos are really resilient, no? They will.
Agree.
Pigilan mo siya, hahanap siya ng ibang pupuntahan, and that's how we are, no, as a nation. That's our culture. And yeah, to answer the question, we will, pero mabagal siya. Businesses will try to adjust to the times, no. We will all adjust to the times.
I understand from another webinar I attended that sabi nung forecast, the recovery of the economy will probably start at the earliest is Q2 of next year. At the earliest.
If all things remain equal and the same, oo.
Yeah.
Oo.
Okay.
But there are other economists also saying na it's probable for the Philippines to recover by year end of 2020.
Which is better. Which is better. Okay. So Miguel Sanchez is asking, forecast as discussed is to remain at 47.5 to $1 exchange rate until end of 2021. What are the drivers that will allow the continuing strengthening?
Remittance is always the biggest driver of the strengthening of the peso. And because there is um, less exports, less imports rather, less imports, it does not require a lot of foreign exchange. So that makes the exchange rate better now.
Okay. Rex Mabunga is asking, I may have missed this during our discussion. Where would be a good investment? Where would be a good place to invest?
Nako. Really depends on your risk profile. No? I will not say that there's one steady, correct formula for investing. No? Um, but ngayon kasi, let's say, if you want to invest in the stock market really is a long-term investment. And I would say to anybody who would ask me, no, when you invest in the stock market, it's money that you're willing to lose. Otherwise, you wait for the long haul.
Right.
10 years for sure, it will increase. Pero pahabaan siya ng pise.
Correct.
If you want to earn, go for investments that have lower risk or moderate. So, ano
Bonds.
ba? Bonds is a better one. But of course, interest rate is going down. No? So, medyo malulugi ka. No? Pero yun nga lang, sure ka naman na hindi naman siya
Yeah.
Hindi ka malulugi doon in such a way na siguro ikakalugi mo lang yung interest rate kasi pwedeng mas maganda this time tapos bumili ka kunyari yesterday but the rates are better today, so yun lang yung
Right.
magiging change mo, but the maturity will be there, so you'll be fine. CP is probably a good thing also. It really all depends on your risk profile, and you can go to your financial advisor, to your banker, who will do the necessary tests for you. It all depends on your risk profile.
Right. Agree. All right. Benedict de Borja. Dinky is asking, hi, Ma'am JC. Given that the full impact of the pandemic on the banking sector is yet to be fully felt, plus the heightened need for strengthening cybersecurity, is there room for banks to invest in this, given that the squeeze on them will be felt this year? I think the question is also cybersecurity.
Yung risk assessment. A lot of us, even in my company, hindi rin kami handa to spend for cybersecurity, but we were forced to do it.
Yes.
There are a lot of instances for most companies, even locally, no, na nahahack na talaga. And there is really a need to do cybersecurity risk assessment. And people have taken advantage, no? These people, whoever they are, have taken advantage to our infrastructure, information, IT infrastructure, where it's somehow weak, no? So it pushes all organizations to take that stance. So kahit na walang room, they will have to do it because, of course, there is IT risk to be considered. There is data privacy to be considered. Data privacy requires that you're able to withhold you're able to keep information of your clients. Now, if your website stores client information, that's delikado yon, no? So delikado yon. So any breach of that will require you to report to the National Privacy Commission within 72 hours, and you are required to provide a plan already, an action plan that will work. So kailangan niyang gawin kahit na wala siyang budget for that. It will be an out of pocket, kumbaga, for the company to invest on.
All right. Anthony Dogenya is asking, hi, Miss JC. Most of the initiatives are coming from the private sectors to mitigate risks like the one you mentioned on up-training employees. Question is, would we know, tumaas. Sorry. Question is, would we know any plans from the government as well to help the workforce in response to this pandemic?
hindi ako masyadong privy, let's say, to development of employees insofar as government is concerned. But of course, the government, insofar as their workforce is concerned, is already being professional na rin, no? So you see how we do things on the private sector is almost the same already. Depende lang kung saan government agency ka nag-work. But we see that happening already. So even let's say yung salary matrix sila is already as comparable to, let's say, the private sector as well. So oo, pwede din. It depends on the agency where you're at.
All right. Okay. We have a couple more questions. Okay. Jansen Serban is asking, as a layperson, what business can we invest in to leverage that will sustain not only during the pandemic? Most banks are right now are offering low interest. Is it smart to take it and invest?
Alam mo, siguro as a risk professional, no, I would always say, no, huwag kang utang sa bangko para mag-invest ka. Kasi hindi nagpapantay ang interest rates natin as against, let's say, the capacity of, let's say, your investment to grow as well. Because it takes time. Haba yung pasensya mo dapat. So, ang hirap sabihin, no, pero basta wag kang humiram para lang mag-invest. Siguro kung magkaiba yung direction, let's say, ng secondary market, meaning the stock market or let's say the fixed income market, kung iba yung direction niya, di bakit hindi? Pero ngayon, pare-pareho lang tayo, flat. So I don't think, no, insofar naman as business is concerned, no, we will always say, no, find your passion, no, find your passion and it will not be a business anymore. Parang trabaho lang.
Agree.
You find something that you enjoy. Oo. Ganun na lang
and you will have
siguro
to work the rest of your life.
Correct.
Agree. All right. Miguel has another question. Our economy experienced good economic growth prior to the pandemic due to consumption spending. What do you see will drive the economy back from its recession, and how long do you think it will take for the economy to experience growth during this pandemic? Partly answered, but I think the first part of the question, I think, what do you see will drive the economy back?
We are not in a technical recession naman eh. Inflation is in a much better point. In fact, GDP nga eh. Sabi ni Joke no, you're looking at, let's say, loans being flat, and you look at GDP, although weaker this time around, we're doing well, no? We're doing well. So, the banking sector, let's say, they've been asked to really do more buffers eh. And it comes without consequence also. Kung di mo kaya magbayad, then may consequence din siya sa'yo as a borrower. But the banking sector and all other financial institutions, they've been asked to cushion the blow, no? So talagang they have to dig deeper, no? Pero yun nga lang, in order for them to also to exist, no? Given this pandemic, the interest, there is, as I said earlier, there are cuts already in the reserve requirement, which will help in the liquidity of the banks, no. Parang umiikot-ikot lang yan eh. If the banking sector is able to support the small and medium-sized enterprises, and then that encourages more people to do small business, and alam mo yun, in a lower scale, and people will have that initiative to find their passion and do whatever it is that they wanted to do all along, no? Especially if you lose your job, no?
Yeah.
So yun, basically that's it, really, no? For now, we cannot really say yan. We are not even in a technical recession. In fact, everybody is so careful, and all the central banks are really working together, no, to make everything work. The government is looking for funding elsewhere each time, no. And we are glad that the other industries are slowly moving, no. We have been coping. Let's say for the food and beverage industry, I was told that si Kentucky daw has shut down some KFC. Kentucky is my age, no? KFC is KFC now is they have shut down some of their branches and they've moved to mobile. So kung nasa na yung mga tao, may mga trucks na daw. And gano'n na talaga. Magbabago na talaga how we do business. We will have to adjust to the times. And that's really the direction for everybody, for all businesses, whether it's big or not, no. You see all of that. And the Filipinos, they're very resilient, no. Kahit nahihirapan, ngumingiti. Kahit nahihirapan, umiinom pa rin ng beer. Di ba mga ganon? Ganon
Yes,
pa rin
correct.
siya. Yeah.
Correct. All right.
So,
Okay. Yeah, go ahead.
So yun, siguro consumer
Consumer spending?
the consumer industry, food and beverage, it will be the same. Kumakain pa rin tayo kahit di tayo nahihirapan tayo, no. Siguro ang mahihirapan lang to recover are those that's coming from entertainment, no. But we see them already moving slowly, no. Diba? We've seen that already quite slowly. The hotels are trying to adjust. We have bad news with Shangri-La although, pero alam mo yun, when an institution like Shangri-La is closing down, you try to think also, have they not decided to adjust to the times? Kasi that's the only way that we can cope, no. If the direction of management is not really to keep on to their brand, then that's how they are, and then we just have to let them do their thing, no.
Correct.
And everybody will be adjusting to what is available to them.
Right. Galing. Guys, personally, I'm learning a lot. Napapanganga na lang ako, Miss JC. Pero learning a lot here. Ayan, si Benedict de Borja saying thank you for your answer earlier, Miss JC. Si Lito Caballero is asking for your comments. So if you have comments now, if you're aware of what the Congress is doing in regard to the Chacha movement, economic amending the economic provisions in our constitution. Do you have any comments for that?
Alam mo, minsan kasi may mga batas dapat na hindi mo muna sinisimulan. Tingin ko mas marami tayong problema more than this, no? Pero ano ba? How do you politically what's the politically correct answer? Oo. Hindi ko rin masasabi, no?
Parang, essentially what you're saying is parang sa dami-dami ng problema natin, tinkering with the constitution right now is not a very good idea. Parang ganon.
No. Yun, lalo nga sinasabi, dami natin problema, yan pa talaga uunahin. Yun.
Yeah. Okay. So, JC, sabi ni Jeff, will tourism and the airline industry recover this year or only after vaccination?
We have seen the airlines slowly moving, no. Ang nakakatawa dito, if you talk to people who are traveling, no. So may mga there are health protocols being observed in the airport but not on the airplane. So mukhang okay naman yata sila, no. But of course when you look at, let's say, yung the number of people traveling, it will not be the same. Not all employees have returned to their posts, no. Hindi kasi maraming bumabiyahe, and if you look at it, napakagastos even sa domestic flights alone, no. If you, let's say, go to Boracay, you have to spend for your swab.
Yes.
No.
Yes.
You have to spend for your swab, and as an individual, parang is it worth it? Parang if you go travel, parang mas mahal pa yata yung swab ko kesa dun sa pagstay ko dun sa hotel. Combined, if you have to bring your entire family. There are people who travel and for business, and wherein the company will spend for, let's say, the quarantine for 15 days, let's say, overseas. And sige, pero hindi lahat ng kumpanya are willing to do that. So it's essential travel, no? We look at probably it, and there has been talks ever since last year that probably the airline hospitality business will start moving. but not on pre-pandemic levels probably in the next 2 to 3 years.
Yeah. All right. All right. Okay. So we have a lot of well, thank you daw sabi ni Jess, thank you sabi ni Jansen. China factor and local elections next year. What are the impact? What is the impact rather of the China and the 2022 elections? Ganyan tayo mga Pilipino, no? So early in 2021, we're talking of 2022 elections. Pero that's who we are. That's who we are.
Marami na nga pumoporma ng mga politiko at this time, diba? Ang dami na pumoporma, minsan maiinis ka na din no? Well, let's just hope that they do not take advantage of everybody else. Alam mo yun, push for certain changes, let's say in monetary and fiscal policies to benefit themselves. So that's the only prayer. Otherwise, pwede naman tayo magalit, no? Pwede naman tayong magalit. I think the government has afforded us that siguro that liberty to say what we want, no? We have never everybody is lucky that wala pa naman nababalikan dahil sa kanilang stand, no, on certain things. But I guess China factor. Ganun pa rin talaga. Minsan mapapainin ka na rin, no? There are benefits that's being given to that country, no? And sometimes you just